You are watching News Now. I'm Shabani Ghar. Today joining us in the studio is my colleague Ankur Mishra. Ankur, so the retail inflation data is finally out, and
the March numbers are out. Important
March
is that
numbers are
after
out.
that escalation happened.
Yes, absolutely. After that, the numbers after the escalation are finally out. That gives us a real status on how and where is the inflation headed. So, Ankur, what's happening?
So definitely, if you talk about the numbers, 3.4% is much on the anticipated lines. But more importantly, if you talk about the food inflation, we have seen some spike in this month. And if you talk about the factors, comparable figures, yes, 3.21% was the last month's number. And this time we have come in at 3.4%. Food inflation at 3.87% is something which has seen some kind of inching up. If you talk about the specific prices, cauliflower is something which has actually seen inflation, but on the other side, potatoes, if you talk about even the few of the tur dals and all those constituents have seen the inflation in the negative territory. And to decode these numbers, what does this mean? What does this data actually signals for the months to come, especially after the escalation? We have three important guests with us. Let's welcome Aditi Nayar. Let's also welcome Rajni Sinha, and also we have with us Siddharth Sanyal. First, I want to come to you, Aditi. The number has come very much as per the expectation, and there are no negative surprises here, right?
Absolutely. What we had anticipated was a print of 3.4%, that with the onset of the crisis, there was only going to be a limited transmission in the month of March. But the major impact of the crisis will probably now be felt in the reading for the month of April. So if you just look at the headline number, very much in line with the expectations.
Right. Right. Moving over to Rajni Sinha. Help us understand, some of the food figures that we are seeing over here, in the CPI data. I mean, the food inflation is there, but, some of the producers like onions and potatoes, they have gone cheaper as compared to the previous data. Why is it that? Is it because of the bumper crop, or is it because of the export related restrictions? Why hasn't, the increase in the diesel cost, for example, not impacted the likes of potato?
So, Shibani, if we see the overall increase in food inflation, firstly, some increase in food inflation was expected as the base effect, high base effect, which was there earlier, that has waned off. So with that waning off, we have seen overall the food inflation increasing to around 3.8% or so, which is very much on expected lines. And specifically for some of the vegetables, like you discussed, cauliflower, tomato, they have seen month-on-month sharp increase in prices. Whereas if you see the other components of food inflation, like you highlighted, some of the vegetables and some of the other food components, in fact, inflation has gone down. So right now, there was no expectation that we are going to see significant impact of the West Asia crisis. In fact, we are going to see the impact only in the later months. So right now, what we have seen, the food inflation, that's very much on expected lines. And, a little bit of, say potato prices going down or something would probably be because of base effect, and nothing as such fundamentally that has happened which would have pulled down the prices. And like I mentioned, in fact, the increase in inflation which we are all fearing, we are going to see in subsequent months. Even if the retail prices of, petrol and diesel is not increased in the next few months also, we will start seeing the indirect impact. So that is what the concern is.
Right, and that concern remains. Let's also take views from Siddharth Sanyal. Siddharth, how do you see these food inflation numbers well below 4% still? But as the fellow panelists were also mentioning about the risk of it getting increased in the month of April and probably in May as well, even if there is no fuel price hike, where do you think the risk will be there as far as food inflation is concerned?
Aditi and Rajni here. Yeah, it's interesting that within the food basket we are witnessing diverse set of movements. You are absolutely right there that the last few months, from weather-related dynamics wise, it was a relatively favorable period. The Rabi season monsoon had been decent. Water level, groundwater level had been decent. So that got reflected into some kind of decent production on some of the crops that you mentioned. So that possibly provided us the relief. But it's important to note that apart from waning of the base effect, there are forecasts of a not so favorable scenario in terms of weather dynamics over the course of the next maybe say 6 months, where a El Nino kind of a scenario might actually come into play. So it's very important how intense that particular dynamics turn out to be over the course of the next 6 months, say the summer crop time. That will be very, very important. So even if we take into account that there is no immediate uptick in fuel prices, you might actually see some bit of uptick in food inflation in a more generalized terms. That seems to be very much the case going ahead over the course of the next few months.
Siddharth, stay with us. You know, why is the inflation hitting rural India harder at 3.63% as compared to the cities at 3.11%?
Is it for me?
Yes.
Well, I think that particular dynamics comes from the difference in the basket. And in that particular basket, I think at this moment, some of the service sector units whose weightage is relatively higher in case of the urban dynamics, urban basket. That possibly has not really moved that fast. We need to see that whether the same trend stays. My sense is that over the course of the next few months, there might be a little bit of convergence and unfortunately at a higher level. But at this moment, some of those factors which get repriced, for example, education-related prices, which is a very significant component in the urban basket, typically get repriced in the early summer months because of the school and college sessions and stuff like that. So we need to figure out how exactly they pan out. But some of these factors possibly had come into play at this moment, which had offered some bit of cushion. Maybe renters. We need to see the details, how exactly they played out.
Right. Aditi, I want to understand from you the numbers core CPI, even Reserve Bank of India this time, a governor during the monetary policy statement, he started giving the core CPI guidance as well. The projections were given first time by Reserve Bank of India, but this time the number is at 3.3%. How do you read into numbers and minus food and fuel? Do you think there is a risk on other side as well?
Just before I get into that, I want to pick up from what Siddharth just said. Couple of more points that we need to be watchful of on the agri side. First of all, in North India, we've had some amount of unseasonal rain even coming into April, and we need to see how that is going to affect wheat harvest, for instance. How are the yields going to look? And then, of course, while we are very watchful of the fact that there may be an El Nino coming up over the next few months, at least as of now, the reservoir levels are still very healthy as compared to last year. So I think we need to just keep that in the back of our mind that perhaps the development of an El Nino over the course of the next monsoon season may not necessarily lead to a delay in the sowing itself. It would affect the gestation of the crop in the later months. So that's just a little bit of a palliative that we have as we are awaiting what the IMD says in terms of the forecast for this monsoon season and specifically on El Nino. Now on the core side, I think generally the market very much welcomed the fact that from the RBI, from the MPC, this time we got core inflation projection as well. Generally, I would expect this number to again start moving up as we see more of the impact of the West Asia crisis transmitting into the headline CPI. Naturally, the core CPI will also start going up. Now, across different segments, the impact would be varied. And again, as Siddharth said, there are some services that will reprice at a particular point in time in the year, but not very rapidly or not very frequently after that. So one thing would be, for instance, on education, as he said. There are other things where the repricing will follow a different kind of a pattern. So for instance, if you look at housing, and this is another segment where the weight in the urban area is more than in the rural area. Now, when will housing rent start to reflect the fact that there is this overall stress in terms of energy price and energy availability? We don't know how quickly this will start showing up, but there is a pattern to which the housing data is taken by the CPI. So most housing units will be polled every 6 months.
Right.
So even if the prices start going up, until you actually go back and poll them again, which may only be 6 months later,
right,
you may not necessarily actually capture that.
Right, right. Aditi, stay with us. You know, with the P stocks, because you also brought in, you know, like a couple of stressors, including the energy stressor. And given that the P stocks have failed in Islamabad, you know, over the weekend, what is it that, you know, our country should brace for in the next few months in terms of inflation going forward?
Look, really hard to say. I mean, last week we thought that maybe the ceasefire is here to stay. We were hoping that that would be the case. And the scenario was looking very, very different. I think as of now, every country in the world needs to be braced for volatility. What we've seen in the last 15 months, whether it was tariffs, higher tariffs, lower tariffs, crisis, ceasefire, back to crisis, you know, definitely it's not necessarily a crisis that is going to end very quickly, or that certainty or lack of volatility will be back in the markets very, very soon. How soon it will come, we don't know. And three things I think that we really need to keep in mind when we're looking at how to assess India's macros, for instance, going forward. One is the duration of the prices. Of course, everybody is talking about that. Second is the price of different inputs that we import into India. And the third is availability. Even at a high price, if availability is not there, then the impact on growth will get compounded. High price but availability has a different growth impact, and high price with tight availability has a totally different growth impact.
Right, and as we speak, IMD has released first estimate of monsoon, and they see 92% of a long-term average. Rajni, I want to come to you with this forecast. How will how from economist lens you see this, because there are concerns even on the monsoons front as well now?
Yeah, absolutely. There is, in fact, there is a higher probability of El Nino happening this year. So that would have an impact on food inflation, which is a concern. And like we have been discussing, the West Asia crisis, there's a lot of uncertainty around that. You know, when a ceasefire happens, how much time does it take for the supply to get back to the levels at which it was pre the war situation? One thing is for sure that we are going to, even if there is an early resolution to this crisis, we are going to see high crude oil prices. So probably for the year, crude oil prices are going to average around $85 to $90. And in such a scenario, our estimate for next year's inflation is quite in line with what RBI has said. If we assume crude oil prices remain around 85-90 average, we are expecting CPI inflation to rise to around 4.6% or so. And in fact, if the situation escalates, it's very difficult to say now, and if the crude oil prices are at even higher levels, the average for FY27, we can see CPI inflation going to even higher levels. One more thing I want to highlight is that while we are talking about core inflation, and core inflation has come at around 3.3% or so, and as RBI has highlighted that next year the expectation is around 4.4% core inflation. But we must keep in mind that if we exclude precious metals from this, core inflation goes down quite significantly. So for instance, for this month, if you exclude precious metal prices, core inflation goes down to around 1.9 to 2% level. So overall, you know, demand side inflation is weak in the economy. And in fact, if there is, you know, if this crisis situation escalates and worsens going forward, we could also see some demand destruction. So I would say on inflation, the main concern would remain around supply side bottlenecks. One, the energy crisis that we are talking about, and this could get aggravated if the monsoon is not favorable.
We have to look towards west for the energy crisis and up towards the sky, not for divine intervention, but with regards to monsoons. Thank you so much, Rajni, Aditi, and also Siddharth for joining us today on ET Now.